Well, it is Money Monday. You may have gotten something in your mail or some email reminder sent your way telling you that your insurance enrollment period is coming up. And for some of us, it's a stressful time. So today we're trying to make some of those choices a little easier for you. To help us with that, we have Stacey Kupski here, the Vice President and Wealth Advisor at Wayzata Bay. Stacey, thank you so much for hanging out with me. We were just talking about how money can be kind of funny for people to talk about. So I love that you enjoy talking about it. Let's jump right into health insurance plans, right?
Sure.
What are some things that people should be thinking about when they're looking at all their options?
Well, I like to relate it to what's happened in your life, kind of a three-prong approach for health insurance. Have you aged? Do you have a child coming? Do you have a child that maybe has left the nest, or some sort of element that might be different as you plan moving forward into the next year? So those changes are what you want to relate and reflect back to your health insurance coverage, and make sure you're really covering the whole scope of not only what life is today, but what life could be over the next year. So just equating it to big life moves for you and your family.
The period of opportunity is what I've heard one person call it, which is pretty cool. So, you know, can we also look at our 401ks at this time of year? What should we be looking forward to in regards to that?
Yeah, so what's great about 401ks is you can really change those at any time of year. But why I like to look at it for open enrollment and encourage clients to really be thinking through 401ks is it lets you direct your cash flow. Right? What are you planning to do for the next year? Do you have a big home improvement coming up? Did you get a pay raise? Let's celebrate that. And should we be, if we're not already maxing out our 401ks, putting more of our dollars to work there? And if you turned that magical age of 50, which we haven't yet, so let's celebrate the ages we are, but when we turn 50, we'll be able to add more to our 401ks, which can help some families who maybe they launched kids and they've been paying for college, catch up for retirement. So that's a good point to just say, can I be adding more money to this pool?
Absolutely, because I was going to ask you that. Like, how do you know how much you should be saving? Because I feel like I get a different answer for this all the time.
Well, it depends, right? It depends. Are we just getting started, right? So I always like to equate it to we have to have fun in life. And sometimes, even in my profession, we forget that money is not only for saving and security, but it's also for fun and enjoyment. So what's that balance? And that's how we can determine how much to put into our 401ks. What's the balance we want to have next year? Someone very early stage in their career, they're just getting started. Maybe they're just getting the match, right? If my employer is giving me essentially free money, we don't want to be leaving money on the table, is what I always tell them. So if it's 3%, 4%, if it's some complex equation, let's try to match that if we can to really squeeze as much as we can from our employer and take advantage. We work really hard for those dollars, so let's take every dollar that we have the opportunity to get. So that's early stage. Mid stage is, again, if we're not maxing it out, let's try to max that out. And then it's the determination of, should I do pre-tax or post-tax? And this is where most people check out.
They're like, what are you talking about? So how do you put it in layman's terms for people?
Do you want to pay the tax now, or do we want to pay the tax later, right? Now, if I would ask anyone that, they would say, always defer, I want to pay the tax later. But eventually we're going to have to pay the piper. So sometimes it makes sense, again, if we're in a low tax bracket and our CPA is telling us this is really a gem opportunity to be putting money in as a Roth, let's take advantage of that. Or maybe let's fast forward to the end and our spouse has retired or our partner has retired, but we are still working. Well, maybe I'm then again doing Roth. So again, it's just matching that life cycle you're in and determining how much we can be adding.
That is the t-shirt. Match the life cycle you are in. Thank you for making us a little bit smarter in a short amount of time. And of course, I'm sure that we will see you again Money Mondays. I'm liking it. You can rewatch this interview for those tips at KARE11.com/noon.